Ladies and gentlemen, good day and welcome to Macfos Limited FY26 earnings conference call hosted by Him Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Bhumika Maheshwari from Him Securities. Thank you and over to you.
Thank you, Samar. Very good afternoon, ladies and gentlemen. Thank you for joining Macfos Limited's quarter and half year ended 30th September 2025 earnings call. Joining us on the call today from the management team are Mr. Atul Dumbre, Chairman and Managing Director, Mr. Vinod Prasad, Full-Time Director and CFO, and Mr. Nilesh Kumar, Full-Time Director of Macfos Limited. We will now commence the call with the opening thoughts from the management, post which we will open this forum for the Q&A session where management will be glad to respond to any queries that you may have. Before we go on to the main call, I would like to read the standard disclaimer. There may be forward-looking statements about the company and the subsidiary which are based on the belief, opinion and expectation of the company's management on the date of this call. The company does not assume any obligation to update their forward-looking statements if those beliefs, opinions, expectations or other circumstances should change. These statements are not guarantee of future performance and involve risks and uncertainties that are difficult to predict. Consequently, listeners should not place any undue reliance on such forward-looking statements. With this, I hand over the call to Mr. Atul Dumbre, sir, Chairman and Managing Director, Macfos Limited, to take it forward. Over to you, sir.
Thank you, ma'am. Hello, everyone. Thank you for sparing your valuable time to join and listen to this call. We are very pleased to present our financial result for the first half of financial year 25-26. These results reflect steady and strong progress we continue to make across key areas of our business. During this first half of the year, your company has recorded a total revenue of roughly 129 crore with the EBITDA margins of roughly 15.5 crore and a PAT of roughly 10.2 crore. To make a fair comparison, excluding our one-time bulk orders that we have had during the 24-25 first half, which were around 71 crore. If we exclude those orders, our revenue has grown by an impressive 71% year on year. Compared to quarter one of financial year 25-26, our PAT has declined marginally by 1%, about 1%. This is primarily due to temporary factors. One is the promotional offers that we did during Independence Day sales and the salary revision following our July appraisal cycle. We continue to see strong and growing demand for our products. Notably, we are witnessing an increased traction from our corporate customers and also seeing encouraging repeat purchase orders from our existing customer base. This growing trust reaffirms our optimism about sustained demand for future in our offering. This is also reflected in our average order value, which is higher by 27% compared to half year last year and half year this year. A key driver of our growth remains our well-curated expanding product portfolio, which is supported by competitive pricing and a strong customer support. During this H1, we have added over 20,000 new products, which has significantly broadened our product portfolio and strengthened Fubu's position as comprehensive and preferred platform for our customers. In addition to our digital marketing initiatives. We have actively participated in several domestic exhibitions. These efforts have enhanced our brand visibility, strengthened our market presence, and allowed us to explore more organic and cost-effective marketing channels. To support our growth, we are proactively strengthening our IT infrastructure, enhancing order fulfillment capacity, speed, and improving intra- and inter-warehouse management systems. Our core business indicators, such as traffic on our website and application, total orders that we serve, average order value, and customer retention, all show continuous strong growth and encouraging trends. Looking ahead, our key strategic roadmap continues to be guided by Robo 1.2 and Robo 2.0. These are our two key strategic pillars for future. Robo 1.0 represents our core electronic distribution business, and here our focus remains on offering high technology products at competitive prices, supported by responsive customer support service and minimum lead times. We are deepening our supplier partnerships and investing in our IT infrastructure to improve procurement efficiency and shorten delivery times. The continued expansion of our SKU base also reflects our commitment to making Robo.in a comprehensive and reliable platform in our segment. Of course, Robo 2.0 focuses on building and scaling our proprietary product ranges with special focus on growth category. Over the past 2 years, this area has gained a very strong momentum with growing acceptance of our in-house developed products. We have successfully supplied drones to few defense establishments this H1. While volumes are still modest, the response has been truly encouraging. We are also conducting trials and working in collaboration with these units aimed at developing indigenous products and solutions for the future. I thank you for your continued trust and support. As we always say, we always consider our shareholders as our core partner. And your continued support always inspires us to keep pushing forward, to build a stronger, more innovative, and future-ready Robo.in. I again thank you for your valuable time, and my presentation is over for today. Ma'am, over to you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Praneeth as an individual investor. Please go ahead.
Hello. Thank you for the opportunity. So I was wondering in terms of trying to understand the overall electronics industry in terms of kitting. I understand we're just a supplier at this point of time, but are we also planning on looking into kitting as an idea, because then you can increase your average order value by a lot more, right? So I was wondering your remarks on that.
Mani, your voice was a bit breaking. Could you please repeat the question?
I'm a bit audible now.
Yeah, you're audible, but it was a bit shaky, so I just missed some words in between.
Okay, so I was trying to understand the electronics industry, and I realized that kitting is a large factor, right? So first, there's suppliers like you, then there's
kitters. What is large factor? Sorry. What is large factor?
No, kitting. Kitting as an aspect of the overall electronics industry.
Kitting is large factor. Okay.
trying to understand. So right now we're just a supplier, right? Are we planning on also going into kitting as an aspect of it? Because as these EMS companies tend to get bigger, kitting can be an option for them. So how are you seeing the overall industry dynamic in India for that? And how does Robo want to participate or not participate in it as a strategy?
What do you mean by kitting? And I just want to get more clarity on your question.
So like getting these components, so whenever, let's say, hypothetically, you need a PCB, there's usually these specific components that these companies tend to kit together and just send it out, right? So something like that.
Okay. So I got your question, Mani. Sorry for just getting clarity to be 2-3 times maybe. But overall electronics industry, as you rightly said, that there are these contract manufacturers who also play a key role in electronics industry. And in our understanding, it's not kitting, but the phrase that we use is what is the availability that you have. So if we are having, let's say, 100,000 discrete components on our website, and some manufacturers have a board, PCB board, what is the fulfillment ratio for that board? Is it 70%, 80%, 90%? What is it? And I think a lot of decisions by those contract manufacturers are governed by this factor also, because they prefer to buy from maybe one or two, at least one player who is having most of their components. So we, of course, want to be part of this industry. And with that in mind, I think around a year or year and a half ago, we have started aggressively adding the discrete components. You can see that in our presentations or in our in the data that we release, that we have been increasing few thousand components every quarter. That is mostly these discrete components. And when we have enough portfolio or enough number of SKUs on our in our warehouse in stock, I think this will certainly play a role. We have already seen some positive signs of having the SKUs. We also have launched a BOM tool, because the discrete components have, like, there are sometimes 100, 200 SKUs on your one simple board. So we have recently launched a BOM tool, which will help you upload an Excel and get the bulk availability and price by uploading Excel rather than one-to-one. So yeah, so we are looking at this industry right now, not much, but we have plans to support these contract manufacturers.
Understood. So, and another question is regarding the overall industry. I understand that Robo has a proprietary a great VAT selection, and on top of that, in terms of inbound orders, you have a great website which tends to cater to most things where others do not. But the thing is, at the end of the day, there are many component suppliers like you, similar in the industry. I agree with smaller SKU count. But the thing is, I was wondering how do you plan on positioning yourself, and how is the overall market developing? Because as these contract manufacturing, as the electronics industry develops in the country, there's a chance of everyone also participating in it. So how does Robo see its position in this? Because with many suppliers, what ends up happening is, if they're B2B especially, they tend to squeeze on the margins. That's my opinion on, like, I think that's how it works. So I was wondering, how does the management see the overall industry, because there's so many players, and how does it see itself going forward in terms of growing revenues, because there are much bigger players than Robo also in the market?
Yeah, so looking in the future, there is no doubt that any industry, let's forget about electronics industry, any industry that you name, where there is honey, there will be honeybees. So the more and more electronics industry go, and this distribution and other businesses go, there will be more and more players. And it will result in what it generally results, a little bit lower margins into these bulk orders. But the overall size is also huge. The overall size will also become huge. It's already a big industry, and it will keep on continuously growing. And we already have taken note of that, and we are trying to build our own brands. We're also trying to build Robo 2.0, so that, let's say, 5 years down the line, even if we have 1.2 business huge in terms of the total revenue, we will, and slightly lower margins because of huge orders or whatever competition we have, we're still able to plug in those margin gaps with the activities that we have already started maybe 2 years back or maybe this year. So yeah, that's the simple answer for this.
Understood. Would you be able to give an idea on like the split of revenues between Robo 1.0 and Robo 2.0?
Right now, we are not giving any split of revenues because Robo 2.0 is still just a kid. We have started, like if you see what we are saying to investors maybe last year or even this year earlier, that we have started 2-3 segments and we are just making products, listing on website or selling in the market and see what is the response, what is our technical strength, how much acceptance we are getting. So now we see that for drone segment specifically, we have seen a lot of traction. So now we are focusing on that segment. And I think it's a long-term play. So there will be a time when we'll have to focus more on revenues. So right now the focus is more on building the products and generating market acceptance.
So I was wondering, like, more to understand the report card between Robo 1.0 and Robo 2.0. So what are the factors that went well for Robo 2.0 for this quarter? So to understand a better perspective, because as a company is making a strategic shift in terms of growing just from one aspect to other aspects, I think as an investor, I would like to understand like how it is working out and what worked out for the quarter, for the first half, and what didn't work out so far. So I was just wondering about that sense.
Yeah. So the fundamental of why we are doing Robo 2.0, why we are focusing, I already gave you the answer. For the future, we are banking on that. And we consider ourselves as a tech company, so we want to do this stuff, which will have better moat and have our own products and so on and so forth. Secondly, on quarter-to-quarter basis, I think it's really hard to judge something like Robo 2.0, where we are launching the products, developing the products, putting a lot of efforts in developing, putting them in market, getting a market feedback and going on this. So in a nutshell, if you ask me, when we started Robo 2.0, we were doing products in 2-3 segments like sensors, some controller boards, some drone products. Now I think more of our focus is on drone products, our own drone products, because we see a lot of traction to that segment from market. And I think that is the crux of where we have reached in Robo 2.0. So from starting just building the products and getting the market response to now more or less focusing on one sector or being bullish in one sector is something that is the crux of how far we have come in Robo 2.0.
Understood. So while I try to understand the overall gross margin figures, because I've noticed that it's remained around 25%, barring the first half of 25 where you hit the bulk order. So I was wondering, as you grow larger, you also acknowledge the fact that you might need to compress a little bit of the margin as the orders grow bigger. So I was wondering, with the inclusion of Robo 2.0, do you expect this 25 figure to maintain as you grow, or do you expect it to expand beyond this, despite the margin compression you might receive from larger orders?
We at least want to maintain the figure. That is always our first priority. And if and when we get a better response for Robo 2.0 and we start selling higher percentages, if you're looking down the line 4-5 years, when we evaluate how much percentage of total business is 1.0 and 2.0, nobody knows at this point. So yes, it will totally depend on how much of the success or the overall revenue we are able to generate with 2.0. And not only that, what is that compared to the total growth of Robo 1.0? And that is really hard to predict right now. So the more Robo 2.0 growth, of course, it will help us in terms of margin, but that is not the only factor. Our own brands, also some of the small service business that we are doing, those are also the factor. We are also trying to do certain activities on our Robo 1.2 business where we will be able to preserve the margins or increase the margins by 1% here and there. So, yeah, but the increase of margin will be dependent on Robo 2.1, 2.0's products and the market response, overall revenue that we will be able to generate longer run. Maintaining part, it's overall 1.2, 2.0, both we want to just, at least we want to maintain.
Got it. So could you also list out like what are the specific factors you're doing at this point of time that is helping you going to maintain, because you just mentioned that you're doing specific like the small service business or the other thing you just mentioned. Could you list out those things? What is helping you in terms of maintaining the gross margin?
Robo 2.0 is obviously one of the major things, but if you just remove Robo 2.0 and focus on Robo 1.0, One is always our IT infrastructure development. We want to do as much of the work automatically, autonomously. We have our own ERP, we have our own other IT softwares, which we keep on developing month on month. We have a small team in-house. That is one of the efforts. Second is, it can be summarized in one word: efficiency. So through our IT infrastructure system. Second is, major chunk is our warehousing. So maintaining lower inventory, maintaining better inventory, having the more efficient warehouse operations, even to the level where what is the cost of packaging and shipping one order. If we can reduce that by so and so, it will be more efficient. Third segment is always supply chain. So we are always thinking of how we can get better prices by increasing bit of volume or having better relationships with our suppliers, and how we can squeeze some efficiency out of that. So these three areas: supply chain, our warehousing operations, and IT infrastructure. I think these are the key factors where we focus to increase efficiency in Robo 1.0. Also, there is this factor of having higher and repeat orders of our corporate customers, because though on margin side they look smaller, but the volumes are really encouraging. So that side of getting more business from them and align more with them is also one of the factors.
Understood. But you mentioned that you're spending a lot of IT, but so is employee cost also growing. I understand with the scaling you're doing, employee costs tend to grow. But could you give a forecast on where do you think this might stabilize in the overall picture?
So generally our appraisal cycle is in July. So from July, August, September, from month of July, we have increased salary. But that salary is going to stay for the next year. It's not going to increase for the whole year now. So I think it happens, and then we reap the benefit of that, throughout the year. So when you see we have been doing this every year now, so it's not new thing, and you'll see it settle down by the next year. We'll have the figures because revenue is growing, our profits are growing accordingly, and the percentage. So the important thing is what is the percentage of the employee salary in total revenue that we have. So that we always have our eye on, and year on year we keep on reducing it a bit by bit. So yeah, it's okay.
Understood. So you're not expecting it to grow the workforce. I'm just trying to understand, because it went from
Q2. We are not expecting it to grow like that. It's done for this year. Now next year we'll see.
Oh.
Okay. Hello.
Yes, sir, his line is disconnected. Thank you. The next question is from the line of Kiran from Table Tree Capital. Please go ahead.
Hi, Atul. Good afternoon, and congratulations on a great set of results. A bunch of questions, Atul. Really impressive how the website visitors keep going year on year and orders served. So the average order value is very intriguing, Atul. We have had a 27% jump. I'm just looking H1 to H1, right? 27% jump. Even if I look at FY25 average, it's 25% jump. So what has changed in this H1? What drew? Was there like some one-time order which grew the average order value, or is it the product combination that has gone up? What is happening there?
So it is combination of 2-3 things. One is the products. It's always factor of what products people are purchasing and what segments are doing better for us and not so good for us in this particular H1 quarter. Second is we have seen that repeat and corporate customers are buying higher volumes. So that is also an impact on average order value. So I think these are two key parameters that increases our average order value.
Got it. And follow-up then is, do you think around this value it is stabilized, or it will come down back to 4,600 like we did in FY25? So I just wanted to get that average order value rate.
To be very honest, it's always a very complex question whether the average order value will go, because when you are looking at 100,000 plus SKUs by now is just very, very complex. However, we have some factor under our control. So we always try to keep on pushing the more to add to cart. We always try to keep on pushing the B2B customers, which are growing day by day. So there are certain factors which we can control. We focus on them. But yes, I just don't want to blindly say that, it will grow on this and not that. So it's an honest answer. So there are some factors in our company. We keep on pushing them, but the product mix and customer mix, if we receive a lot of new customers, in a way it's a good thing, but the average order value is going to go down. If we receive a lot of new customers to our component segment or new customers online. So yeah, that's the honest answer for that.
Got. The only reason why I asked Atul is volume into pricing is how we generally understand FMCG. Volume has jumped by 37% and average order value by 27%. So that's the 70% growth.
Yeah.
Got it. Okay. So that's the first question. Second question, Atul, we've had a very steep increase in the number of SKUs, right? We were 50,000 at some time H1 last year. We jumped to 71, and now we are at 1 lakh. How many of these SKUs, like 1 lakh SKUs, do you truly see offtake? Like, is it 20% of the SKUs that you truly see a large offtake, or is it all 1 lakh SKUs? I'm just trying to understand, because tomorrow, by March, maybe you'll say, I have 2 lakh SKUs. I, as an investor, don't understand what that means.
Yeah. So I get your question. This is a question I think that we get almost every call. But yeah. So the number of SKUs is not directly proportional to the revenue that we do or the company's growth. It depends on what sector. So, for example, if we have some are high value products. So if I am adding a product which is like selling price of 10,000, 20,000, and if even 100 SKU of that, and compare that to a product of selling price few rupees, 5, 10, 50 rupees, and adding thousands of that. So it's almost the same when it comes to revenue terms. However, we have been consistently saying that this current SKU growth is because we are focusing on the component segment, which has very small components with a smaller price. But to have a complete portfolio, you have to add at least around 100,000 SKUs and then see. So I think that phase for us is almost over. We have created a base portfolio, and here onwards, these aggressive numbers, at least in terms of new added SKUs, you may or may not see. It depends on how our revenues and how the mix of that component is working for us. However, that will not signify that, hey, Robo has stopped growing. So even if you add a few hundred SKUs, new segment or new brand which is having a higher sales price, it will still mean the same for us. So we never look at SKUs, we just always target some growth each year, and for that, then we go segment-wise, whatever segment we feel best, and in that segment, whatever growth I'm expecting, and for that, whatever needed to be done. So for 1 crore revenue growth in that segment, if I have to add 5,000 SKU or 50 SKU, doesn't matter to me. That is not our primary intent. Our primary intent is total growth of 5 crore, let's say, for example. Then 1 crore growth from each segment. Then this segment, 1 crore, okay, only 50 SKU. If I add new brand, I'll get it. For this segment, if I add maybe 20,000 SKU, 10,000 SKUs, I'll get it. So that's a top-down approach. Of course, we should keep on adding SKUs, but the number is not that directly proportional to the growth and revenue.
Yeah, understood. Last couple of questions, Atul.
Yes.
Previously, in previous calls as well, you said we'll try to grow at 50% CAGR and 8 to 10% PAT margin. I know we've grown by 70% in H1. I'm assuming there's no one-time order and everything else in this. Do you continue to maintain we'll continue to grow at 50% over the next couple of years with 8 to 10% PAT margin?
Yeah, we have always said this, that we are confident about our historic growth and will be able to maintain that growth. If you look at this quarter's numbers, they're outstanding. To be very honest, they are slightly above even our expectations. So we just don't like to put a number to it, but yeah, in all honesty, we'll our historic growth, and next 2 to 3 years, we believe that we'll be able to continue on a similar growth path. This H1, the numbers are even above our expectations. I mean, we have worked for it, but 2-3 things have 2-3 of our decisions have fallen in the right place and in the same H1 to have this happen. We are happy with this. But yes, the historic growth, we are confident that will continue.
Got it. So there's no one-time order?
No one-time orders in these numbers. Because from day one, we were very clear. I mean, we are an honest company. I keep on saying this. We are an honest company. We are honest founders. And even if you look at our results or the public level document and calls, we always said that there were one-time orders. We didn't want our investors to get too excited because it was the truth. And we knew eventually that, it will come down to this point where we may or may not have was the situation back there, but there will be times when we don't have those orders. So it's best to be honest, and that takes you a long way. So this quarter, again, I'm saying that it's even above our expectation, what we're expecting, because 2 or 3 of the decisions that we took, they all paid off in the same H1, and it was really good H1 for us. However, we don't expect this to continue as well, but our historic growth, yes, definitely yes, for next 2 years.
Good. PAT margins, I think 8 to 10.
PAT margins also we want to maintain around 8%. That's our target. So we always have a gross margin in.
Okay. Sorry. Go on, Atul.
Yeah. So we always want to maintain around 8%, and our thinking process is very simple. We always take our gross margin. We have 4-5 of our top expenses, and we just want to keep them under control in terms of percentage of our gross margins or total revenue. I mean, that's a simple thinking process that we follow, and we just keep our PAT margins at the top. So, okay, this is the PAT that I have to maintain. So, this is the money that I have to fit everything else in percentage, and then that is what we keep on driving.
Got it. Last question, main board listing. I know you can't list a main board till March 2026 because of whatever regulations. Are you guys in the process to kind of apply for main board movement or not really?
So, yes, we know that till March we cannot do. I mean, that's out there in the open that we have to wait for 3 years. And even our situations, we have discussed this topic, but we have never discussed this in detail. I mean, what are the pros, what are the cons, and whether we should do it now, because we are just becoming eligible. We can do it anytime after that. So, it's not on the table right now. Let's see how it goes.
Okay, sure. Thanks. I'll join back in a queue.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, kindly limit the questions to 2 to 3 per participant. If you have a follow-up question, please rejoin the queue. The next question is from the line of Swaraj Mehta from Perpetual Capital Advisors. Please go ahead.
Hi. Thank you for the opportunity and congratulations on a great set of numbers. One bookkeeping question. Advance to suppliers was in short-term loans and advances was about 12 crores in FY25. So I just wanted to understand why do we have to pay advances and how much was it in second half FY26, first half FY26?
Okay, so the advances first half of the 26 is 27 CR. Okay, and it's not actually the advance. So a lot of our business is distribution, which is when we pay to supplier and then the material is shipped to us. Most of that is international. So when the material is shipped via air, it takes certain time. It's shipped via sea route, it takes certain time. And there are sometimes there are some production limitations. So when the material is getting shipped, there is some delay in that production time also. So yeah, so we are not actually paying advance such as we are mostly paying the advances that you see mostly are the material in transit. Simple way to consider that.
Got it. And could you share a bit more about the typical customer profile for Robo? Like, are you seeing high traction from educational institutions, startups, or corporate clients? And how has it evolved over the last few years as the business has scaled?
So, fortunately, our business is a very good mix of different customers. The classification that you gave, so there are educational institutes, there are government institutes, there are corporate customers, there are some customers who are paying online without GST, there are some customers who are paying online with GST, so we know that they are some startup or small companies. So, if you want me to share the split of everything, as a general rule of thumb, we have stopped sharing those splits. But in a trend basis, we have seen our business from corporate customers. Robo has two sales teams. One is the online sales channel, and second is our corporate sales team, which do sales with our selected corporate customers. So that second part of the business we have seen growing from strength to strength since last 4-5 years. And also, even in our online orders, we have seen more and more customers coming up with GST numbers. So it signifies that there is a strong growth of the new companies, small companies who are placing small orders, and we have a pool of customers there who can, eventually some of them will grow and will have bigger orders with us, which our corporate sales team can handle. So this is the overall trend that we see.
Okay. And within startups, what kind of startups do you usually need this? And whom do you provide Robo products for drones? And yeah.
So we are, as on today, I think we are doing some 45,000 orders a month. So it's really hard to pinpoint individual customer or individual category even for us. So we have startups from all the categories that you can think. Just imagine we are serving 6 lakh orders a year this year. So it's a big pool, and it's almost like a universe where you can see a startup from. So if you see India's startup portfolio, and if you see that, there are startups from medical, startups from automobile, maybe IoT, machine learning, from drone, from industrial automation, healthcare. So that same pool will be reflected in around similar percentage in our database because it's a big database. And if you're talking about drones, that is one of our strong segments since we have started early in that. Like if you talk about components or automation or others, there were some conventions there before, but we have been one of the first in India to start the drone segment. So a lot of drone companies that are doing business in India, startups, small scale, big scale, are buying with us. I'll not say that every drone company is doing business is buying in bulk. So some in small, medium volume, some in large volume. So yeah, it's a mix like that.
Okay. And what initiatives are we taking in to increase the average order value and bring in more recurring customers? Is that?
Yeah, so for average order value, we are generally focusing on adding new products because adding new products gives more opportunity to sell the same customers. New products to same customers gives us more opportunity. So becoming more comprehensive is always a part of increasing our average order value. Then increasing our corporate customer portfolio because those are the customers who generally buy in bulk, higher volumes. Those are industrial customers. So that is one of the things that we do. Then there are some other initiatives that we do that, having a better service so that if a customer buys something and he knows that something like Amazon, if you buy from Amazon, you are almost stuck to Amazon because you know that, it's way better in service. So there are 3-4 things that we do generally. So I would say increasing number of products, increasing number of corporate customers, having a friendly or better service, from Robo side. So these are 2-3 things that we do.
One last question. What product categories were the top performers during this period?
That is something that we have stopped sharing publicly because we believe that is something that is a competitive advantage for us, that we know which categories are doing well, and then we can plan in advance compared to other people to strongly build those categories. And by the time everybody knows, we already have good strong presence in the category.
Okay. I'll get back into it. Thank you.
Thank you.
Thank you. The next question is from the line of Swechha Jain from Whitestone Financial Advisors Private Limited. Please go ahead.
Hi, sir. Am I audible?
Yeah, you're audible.
Thank you for giving this opportunity. Sir, I have a couple of questions. So my first question is, I know you're not giving the revenue under Robo 1 and Robo 2, but would you be able to give us the volumes that you did in Robo 1, Robo 2, and the margins for this quarter in Robo 1 and Robo 2? Would that be possible?
No, we are, we don't have plans to give that.
Okay.
We have said last time, I think that the Robo 2.0 volumes are still insignificant. I think less than 5% of our business. So that is the number that we have given. So majority of the revenue is from Robo 1.0. And to understand how Robo 2.0 is doing, we understand that investors are very excited. They are always trying to figure out how Robo 2.0 is doing. So in Robo 2.0, we have been launching new products consistently. I think right now we have around 300 plus products in Robo 2.0, which is product developed by us. I'm not even talking about the pro range brand products. Our own developed products, we have more than 300 plus. And we have now almost focused on the majority of our efforts in Robo 2.0. They are focused on one category, which is drone, because we have seen a good traction in that. Other than that, if you are talking about margins, so our gross margins are in the level of 25%. When we are doing Robo 2.0, our margins are in the range of 10% plus at least, so around 35% plus. So that's the gross margin that we are doing right now. And I think, as I always say, the Robo 2.0 is just a kit. So we don't really want to burden it with the expectations or targets of revenue. Right now, the focus is to build strong fundamentals, develop new products, put them in the market, get the traction from customers, and see where we can go more aggressive day by day, month by month, quarter by quarter, looking at market response. And eventually, some of the products will hit, and we are hoping that those products, when we focus on a long-term period of 2-5 years, almost 5 to 10 years, will become one of the key building blocks of Robo as a company, give us competitive advantage, good margins. And the result of that we are seeing. We have this quarter or this H1 only, we have done some defense military orders. Again, volumes are maybe moderate or modest even to say. But that signifies that we have built products which can be used there. Those are all Robo 2.0 products. And we are doing trials with some of the business. So we see that, this is a good opportunity for us. This wouldn't have been there if we wouldn't have started 2 years ago. And not even in my wildest dreams, I would have predicted that, okay, these kind of products will go in this kind of applications and we'll see a good response from these kind of defense establishment. So yeah, I think we are taking things as they come for Robo 2.0.
Right. So just to follow up, sir, in the drones, if you could just help us understand, what type of typical drones are we making? What would be the typical applications, and the type of drones that are we making? Whom are we typically competing? I'm so sure there would be other competitors. And, what kind of competition are we facing from Chinese players or unorganized sector in this? And then in Robo 2.0, at some point in time, are we also looking to servicing drones then,
Okay. So we are actually not making any drones as of now. Not for the general customers per se. We are focusing on building some of the drone parts and products with proprietary technology of our own. And the drones that we are doing for some military defense applications, I think we are even not in a position to disclose the details there. For obvious reasons. But yeah, whatever we can say, we are not doing anything for the general market. If you are talking about drones, we are doing parts. We are developing technologies that can be used both military and civil applications. But some drones that we have built for military, I think we cannot share the details over here.
Right.
I hope you understand this.
Yeah, of course. Okay. Yeah. So at any point in time, then do we plan to get into making drones for the general consumer? For any other users?
Not right now. Not right now. Right now, the path is simple, that we are making our own technology. So we believe that it's best time right now to build the technology in the different drone parts, that we know the market really well. We know the customer, we know the suppliers, we know the gaps in Indian market. And with the situation that is, we know how the world dynamics are playing right now. So we see we hope that there are some good opportunities that we'll get in future. So we're just focusing on building the technology right now, and there is no plan to make a complete drone possible as of now.
Okay. And so would you be able, you wouldn't even be able to give us the revenue split, right, between Robo 1.0 and Robo 2.0, right?
No, we won't be able to. We don't believe that. If you just want to take a number, it's less than 5%. It's minuscule. I better say even around less than 2% if you want to. If you want to ask me for our own developed product.
Okay. And so just last question: do we have any active order book? Like, do we work on an order book basis?
No, we don't have any active order book right now. We are doing some trials, and we have some orders with the defense establishments. However, I just don't want to get investors excited with that, because the volumes are really modest right now. So even if we get those orders, it will be like not a big business. If something like that happens, we'll share that with the market right away.
Okay. Thank you, sir. Really appreciate it. Thanks.
Thank you. The next question is from the line of Rohit Prakash from Marshmallow Capital. Please go ahead.
Thank you for the opportunity. It's always nice to participate in a Concall, and thank you for all the detailed answers. I just wanted to hear more on the supplier advances and debt. This is the largest our debt has been as percentage of a balance sheet. Could you give us your thoughts on, and I believe last year when the debt increased, it was against this one-off order where you had a fixed receivable coming. And this one, I believe, is against inventory which you're procuring, and it has to be sold to a large number of orders which you're expecting over the next 6 months probably. So could you give us an idea of debt in general and how high you're ready to go, and how do you think of inventory and debt and the risks around that?
Yeah. So I think I don't have the numbers in front of me for the last H1, so I'll not comment on those. But this year, the amount that you see in advance, that I think is generally we are building up for the. If you see our historical trends, the H2 of the year we do more business compared to H1. So with the supply chain, lead times, and delivery from suppliers, we are always building our inventory for that part of the year. And I think that is the point that you are trying to make, that when you see higher number of inventory, and higher number of inventory incoming, and then to buy that material, we'll of course need to have some money. How long we want to go ahead with that? It's a simple calculation. As long as I'm confident that I'll be able to sell those products at a certain profit margin, I'll be able to get certain margins out of those. Why not? Whatever, that's the business that we have, right? So as long as we are confident it will result into the revenues and the profitability in future, we will try to go and get the best as possible. We don't really think of that as a liability. We think of that as an asset. As long as we are confident we are managing that well, I think that's really an asset for us.
So, with the increase in SKUs and the inventory, like the historical 4 times inventory turns that we were used to maintaining, that the whole inventory should rotate 4 times in a year. Are we confident of that, continuing with the increased SKUs and inventory also?
Yes, even today, if you look at our inventory rotation cycles, it's, I think, 4.5 times a year. So, yeah, around 4 times, we are confident.
Understood. And so, I think till recently, we had equity capital, which we raised in a year or so back, and that is what we were using for funding the inventory, and now we're using that. So, till what, how do you think of debt as a percentage of the balance sheet or as a percentage of the equity? Till what number are we comfortable, or how do you look at the maximum debt that you're willing to take? Is there any thoughts around that?
Rohitji, to be very frank with you, we really don't have that number. Our business perspective is always, if I need to buy, let's say, 10 crore worth of inventory of XYZ product, am I confident that I'll be able to move that product in a certain price point in the market? So I'll tell you. In this H1, we had an opportunity to buy one particular product in like 4-5 crores worth of money. We have to invest in that product. But we were very confident that we are getting a certain discount if we buy that volume, and we will be able to move that product quickly in the market. So we invested, and as a result of that, we see that it has reflected in the inventory, reflected in the revenues, and it was at a good margin. So the decisions that we take are totally like this, that if I see the opportunity to move the revenue up, and I'm confident that it will, then we'll do that. We'll do that. So, generally what happens is we don't get an opportunity that, okay, suddenly we have to go for maybe 100 crore extra debt. That's outrageous. It will never happen. So it is generally in tunes of the overall revenue that we are doing. And we just take the decision as and when required. So our main focus is on increasing revenue and with profitability. So for that, whatever debt is required, if you are willing, we are confident that we'll be able to pay to banks and still make margins. Why not?
Understood. Thank you. And my last question is on something you answered earlier. So with time, what is happening is Robo is increasing the scale of operations, which should result in better pricing as compared to other competition for us from our principles. Addition to that, we are increasing the number of SKUs widely also. So we want to become more and more of a one-stop solution where we get the widest range of products at the cheapest possible price in the shortest possible time. Given we are moving more and more strongly in that direction, I'm guessing even clickbait products should not attract customers, right? So why would a customer even try some new website or company, or how would a new competition compete against Robo is something that will be interesting to hear from you.
Rohitji, I'm sorry, but I didn't get your question.
What is the value proposition a new guy or an upstart new startup in your space can offer that you can't offer? With the range of products you have, the pricing you have,
I get your point. I get your point now. So, that's the whole point, because the number of products we have, so there are multiple USPs that we think that we have been building for those last 4-5 years. So number one will be the product portfolio that we have. So somebody asked a question about the contract manufacturers. So they at least require 60-70% of the products from one question of price is irrelevant for them. They don't want to go and buy small products from different 60, 70 people. If you're talking about maybe something like a drone customer, he is not interested in just buying drone motors. He wants a solution where all the products on the drone, if not all, majority of the products on the drone are created by a supplier. So having a good product portfolio is one of the key USP that we have. Second is, I think, robust reach and trust of customers that we have built through the technical support or the overall support that we give. Third is building efficiency in our operations, because in this distribution business, more efficient you are, harder it becomes for other players to compete with you. Our efficiency comes from efficient supply chain, efficient warehouse operation, and efficient IT infrastructure. It's not built in a day. It's not even built in a year or 2 years. We have been consistently putting focus on that for the last 10 years. And now I can confidently say that we are in a position where these systems are really working in favor with us. I mean, if you don't really have a good ERP system, forget about adding even 5,000 SKUs. It will become a nightmare for you. So yeah, so having a good product range, good branding, customer support, having a good tech to build efficiency in your operations, I think those are the USP that we have. And we believe that they will help us in going in future. And we are not living in a daydream. We know as the total size of market will grow, there will be some competition and there will be some pressure on our margins. So we are actively trying to build the modes for us, which will help us to retain that 1-2% extra margin. I mean, that is what it will boil down to. How we can protect that by 1 or 2% of extra margin, that will be under pressure with the competition for our bulk orders or as the business growth. So yes, we are confident that we'll be maintaining this. And at the end of the day, I think we always look up to somebody like Amazon. I mean, what is Amazon if you just look at them as a nutshell? They're just buying product for somebody and just not even buying. They're just a platform who is selling the products. They don't have any competitive advantage if you look at them that way. But when you see how they do customer support and how they control the market in India, it's like absolutely amazing. So if somebody who is not even having their own inventory and asking people to sell on their platform is doing that, why we can't do this? We are absolutely amazed by how Amazon does it. Even if you are able to pull out 10-20% of that, we are good enough.
Well, thank you so much. And one last question on the inventory again. So we mentioned about 4 to 4.5 times inventory turns. Would that include the material in transit, which is in customer advances that we talked about, or is it excluding that number?
I think that's the inventory in our warehouse. So it's excluding that. So when we talk about the rotation, it's inventory in our warehouse. And as an investor, I want you guys to understand that the inventory in transit, that is also a function of nowadays more and more material we are importing via the sea route. So the inherent transit time for that is more. So that I think I have been mentioning since last week or as well that this will happen, but it's okay. We also get some advantage in pricing because of volumes, logistic costs are less. So give or take, it becomes null and void or slightly advantageous for us.
Thank you. Thank you so much for your answers. Appreciate it.
Yeah. Okay. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, kindly limit the questions to per participant. The next question is from the line of Parikshit Kabra from Peak Day Advisors LLP. Please go ahead.
Hi, thank you for the opportunity and congratulations on a great set of numbers. I'm actually going to ask a very generic question. I've been listening to the conversation and I don't know if I've missed something, but I'm just trying to understand what is going right for you guys, right? Of course, you guys are increasing your number of SKUs, but I'm also guessing that there are certain set of customers that are working out well for you. Is it still remains the smaller tail-end customers that are able to penetrate more, or are you getting more market share with the larger customers? Overall, where is the growth coming from? What are the main drivers of it? What are you thinking is working out for you? That's what I'm trying to understand.
Parikshitji, I think it's not a simple question. It's not a general question. It's a very hard question to answer for me. But yeah, in a nutshell, I think it's the simplest answer to this question will be we have planted a seed 10 years ago. And we have nurtured it, we have worked hard protecting it, and it is resulting into what we see today. Along with that, we are extremely fortunate. I mean, I will not take all the credit. We are extremely fortunate to be in the right industry and at the right time. If you look at India's overall paradigm, electronics industry paradigm, so if you go back 10 years and then 5 years and then today, you'll see a consistent growth in this industry. I mean, the government policies of making in India, overall growth of electronics. 10 years ago, your car was mechanical. Now it's all electric. 10 years ago, there were hardly any startups. Now there are thousands, I mean, if not hundreds of thousands startups around us. So this being in the right industry at right time has played in our favor. And I think it will play in our favor because we believe next 10 years are India's 10 years, at least for, the growth in the electronics industry. Okay. So I think that is one of the important factors. And second is that when there was very less number of people or less startup. I mean, when we started, Amazon was not even active in the Indian industry when we started our e-com. So we were early movers in that. We got advantage of that. And then we have worked hard. We have added a new products, new segments on our websites consistently. And we have just done the basics right. So the river is flowing fast. That is the electronic industry. And we are just managing to steer our boat well. That should be the answer.
No, thank you for that. Just a nuance that I'm trying to build is that currently the growth, is there a particular type of customer or a particular type of category of goods? I know you're not giving category wise, and I'm not asking for that, but from a customer segment wise, at least, is there a particular set of customers that are resonating with you well?
Yes. If not one customer, but I'll say a particular category. So we have seen for last 5 years strong growth from the industrial customer side, B2B customer side. That is something that is helping us. Secondly, if you are asking about the segment, I don't think there is one segment because not one of our segment is having more than 25% revenue share in our overall business. So that way we are very fortunate to have a mix of good segments, to have a mix of a vast variety of customers, products and segments, even suppliers, so that we get the benefit of not being dependent on some customer or some supplier or some segment. But yeah, you can say that growth has been partially fueled by the industrial customers that we are able to associate with and increase the overall order value and increase the overall revenue.
All right. Okay. Thank you so much.
Yeah. Thank you for listening.
Thank you. The next question is from the line of Swaraj Mehta from Perpetual Capital Advisors. Please go ahead.
Hello. Hi. One on the other expenses side, that has been an uptrend in the last 4 quarters. And so what have been the factors contributing to this, and how do we see it going forward? And what were the advertisement expenses for this first half?
Hello, Swaraj. I think Vinod will be in a better position to answer this question.
Yes, Swaraj. So on other expenses side, there are many factors which have increased. So first, as we had mentioned, first component was salary. We had recently appraisal of salary. So that's one thing which have increased. Second is we can say marketing. And third, maybe related to IT services that we take from outside. So these are three major things on other expenses side which have gone up.
And how do we see it going forward? Is it going to remain in this range?
So, Swarajji, the thing is that mainly I think the salary and the expenses will grow year on year. I mean, as you know, based on business, we need more people. Marketing, as I said, we always know that we want to maintain certain gross margin and then we want to maintain profit. So our marketing is bound to, the maximum limit of our revenue. So we don't want to go above certain percentage of our revenue in marketing. That is the internal policy. So you'll see marketing growing as the revenue grows, but we will never cross the marketing budget by a certain percent. That is something that we closely look at. I mean, for all the expenses. So the revenue, the salaries of employee in this percent, marketing in this expense. So other key expenses, 2 or 3 other key expenses are there. In this percent, we have to fit. That way, it gives us better control over the gross margin, the net PAT level that we land up with. So we don't really worry much as long as it is into that certain percentage area. So it might go 25 basis point up in a certain quarter. It might go down 25 basis in a certain quarter. If you talk about last year, we have been spending some extra marketing budget in the exhibitions that we are attending. We are almost attending exhibition every month now. I mean, even today our team is attending exhibition in Delhi. So, but we have seen some good results of that. We have gotten some good industrial customers. We have seen some good brand visibility, more organic traffic. So yeah, even after doing that, we are still in that under that percentage range where we want to maintain.
Okay, got it. And majorly variable expenses would be advertisement and package and delivery only, no? And that will go in line with revenue.
Yeah, it should be around that.
Okay. And last year, the bulk order which we had, can you provide more details on the nature of the order? So what were the products involved in it and whether it was from private or a government customer?
We have avoided providing details for that on calls, publicly for that. And anyway, I think it is irrelevant now because we have stopped. We are almost certain that we will not receive those bulk orders again. So it has become irrelevant anyway.
Sorry, I could not hear you. Can you repeat?
Yeah, I said that even when we are receiving those bulk orders, we have avoided providing details for those bulk orders, like who customer and what kind of products. Okay. And I think where we are sitting right now, we are very sure that we are not going to receive these kind of bulk orders in future. I mean, in recent future, at least no. So this thing has become irrelevant for us. We are now talking the revenue without bulk orders anyway.
Okay, got it. Thank you so much.
Yeah.
Thank you. The next question is from the line of Manav Vijay from MV Investments. Please go ahead.
Yes, thank you very much, sir, for giving me the opportunity. Sir, I want to understand your Robo 2.0 slightly better. So, is it possible for you to enumerate what kind of capex plans do you have for this segment for next 2-3 years, if you can elaborate? And second, when you say that you want to manufacture compared to the trading that you are doing as of now in Robo 1.0, so can you elaborate more as to what you mean by manufacturing? So how many steps you are taking, let's say, going back in terms of backward integration?
Okay. So I don't know exactly what we mean when you say backward integration, but I'll try to answer your question based on earlier question that you asked. So one is right now we are investing more in developing teams who will do the design and development of new products. So right now on table, at least there is no question of the new capex in machineries or some big investment like that in factories because we're just getting started. We don't have much of the revenue. Just to give you an idea, if you look at a simple PCB, we have some modules which looks like a PCB and some components on it. So we are getting the PCB manufactured from outside. We are also getting the components manufactured, the the components soldered on it, tested and everything from outside as on today. Why? Because the volumes are such that it is more convenient for us, more economical for us to do that. In future, 2 years down the line, our volume increases. I'll have to maybe think about at least having some machines to solder the components in-house. Now, how much those machines will cost, how much that infrastructure will be needed, I don't know as of now. Depends totally on how many products I'm selling, and at that volume, is it really more economical or efficient to get that done in-house or not. But as a principle, our key focus is always more on creating IP, developing our product, having the software IP or having the hardware design IP around our own products, the brand IP around our own products. That is the crux of the Robo 2.0, where our IP will give us margin. And because I have margin, even if I have to lose 2% over the manufacturing, outsourcing the manufacturing to somebody in Pune or somebody, I'll be more than happy to do it because it gives me more flexibility to do more IP, higher IP activities in-house.
Okay. And so as of now, the focus is on actually developing the team, which will do the design and the development part. As of now, currently, the focus is not on manufacturing at all. As you move along, as the volumes will develop, then you might put machines on the ground.
Yeah, absolutely, Manoj. You got it right.
Okay. And maybe, sir, let's say my question could be wrong. So let's say compared to the already, let's say established manufacturers from where you are sourcing your parts as of now, so when you develop your own design and you get them manufactured, let's say even if, let's say within India, the overall costing of that product under Robo 2.0 comes out to be lower than what you purchase under Robo 1.0. Is that correct?
First of all, Manavji, the understanding of what products we make in Robo 2.0 is very important. We are never trying to replace the product by any manufacturer that we are already working with. We are always trying to find the gaps in the market and fulfill those gaps. For example, when we say we are actively developing some of the products that are required for drones, now there is this huge demand for made in India drone components for obvious reasons. I mean, there you don't really have to think much about, these other manufacturers developing and all for the different people at least. Secondly, if we talk about some of the modules and sensors we are making, there are some Chinese vendors who have very cheap products, but the quality is not so good. There are some players from the European market or American market. They have a really good product quality, but they are too pricey because of the manpower and distribution. So we believe there is a gap in the market for Indian brands who is making the modules, and it can be reasonably priced in between, where we will have a competitive advantage once we develop a brand of our own. So things like that we try to find out in Robo 2.0 and develop accordingly.
Okay. So this is really helpful. I wish you all the best. Thank you very much.
Thank you, Manoj.
Thank you. The next question is from the line of Chinmay Nema from Prescient Capital. Please go ahead.
Good afternoon, sir. I have two questions. My first question is that my understanding is that the categories like drones and learning kits, these are pretty fragmented in the sense that you won't find the same product across different websites. So typically, when a customer is coming to Robo, do they look at the assortment that is there on your website and then choose from whatever is there, or do they come with some specification in mind, and if that product is available, they would buy it from you or otherwise go on a different website?
Okay, Chinmay. So the thing is that customer always have, it's not always, I would say, but more often than not, customer have their end application in mind with this product. That, okay, I want to get so and so things done. So I want to measure the distance. So how much of distance I want to measure? Maybe 10 meter. Okay, what is the accuracy? 10 meter plus minus 10 centimeter. And then they will explore their options. Okay, I have these 5 sensors. This sensor is costly. Why? Because its accuracy is 1 centimeter. This sensor is cheap. Why? Because the accuracy is so and so. Then what is the compatibility with my devices? And then they'll figure out what fits the best to their requirements. So they're always thinking to get some job done. And we have noticed that they are less brand sensitive. However, as the field matures, then there will be top 2-3 suppliers who or top 2-3 brands who kind of become known in the market for their cost and quality, or used by many people. So people know that, okay, these are the brands that generally work. So sometimes customers prefer those brands, but it's always secondary to their application. So first, my application, if I'll prefer this brand because I heard about this brand. But if my application is not sorted with that brand product, I'll go with any other brand. It's not much of a brand affinity that we see.
Got it. So, for example, like on the other side of the spectrum, products like development boards, so Arduinos and Raspberry Pis, right? These are like pretty standard products available across many websites. So, do these flow fast on your platform, or do they not sell well? If you could give some color on this.
Yeah, you rightly mentioned about development boards and Arduinos and Raspberry Pi being popular today. We started working with these brands, Raspberry Pi maybe 8 years ago, Arduino it's like 6 years ago. We drive a lot of volumes for this brand, and then it gives a certain price and disadvantage. So that is there. About customer behavior, I'll still say, even Raspberry Pi being a very popular brand, customer is never thinking that, okay, let me buy a Raspberry Pi. He is always say that, okay, I want to do, on my machine, I want to have a small development board which will help me to run this particular display and to do some image detection using some camera. Then he will figure out what is the best solution for that. Since it is an industrial case, I would need to have a good product with certain warranty and something. Then he might choose from Arduino or Raspberry Pi or maybe NVIDIA Jetson board today, or maybe some 1-2 more manufacturers. He will have slightly more affinity towards Raspberry Pi because he knows the brand. But if he sees 8,000 rupees worth of Raspberry Pi and the same functionality on 5,000 rupees worth of some other brand product which is decent, giving him 1 year warranty, I'm pretty sure he'll go with the 5,000 rupees product.
Okay, sure. And lastly, I'm not sure if I missed this. Could you give EBITDA level guidance, margin guidance?
So we generally avoid giving any future guidance, but we are confident to maintain the EBITDA level margins. I mean, if you look at last H1 and this H1, they are almost similar, give or take 1%. So on PAT level, we are always trying to maintain around that 8% margins. EBITDA level, mix of product and the quarter and this yearly level, I'm pretty confident that we'll be going in the smooth 1 or 2% gap. But yeah, our main target is always on the PAT level.
Sure, thank you. That's good from my side.
Okay, thank you.
Thank you. Due to time constant, this was the last question for today's conference. I now hand the conference over to Bhumika Maheshwari for closing comments. Thank you, and over to you, ma'am.
Thank you so much. On behalf of Fame Securities Limited, I would like to thank Macfos team for giving time and responding to all the queries in a very detailed manner. I would like to thank all the participants for joining this call. Now, I would like to hand it over to Samad for closing remarks.
On behalf of Fame Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.